All right, well, here we have Glenn Darcy, which is known as Mr. Darcy, not the Mr. Darcy of Pride and Prejudice, although it looks very similar.
Back when I had hair in those days, yeah,
Right.
sure.
Glenn, you've had probably over 30 years of experience in the broking industry, and specifically around 10 plus years directly doing house and land and construction loans.
Yep.
And so you're well versed in all things construction. So we're going to tap into your knowledge and your brain a bit today to give anyone who's listening the insights you need when you're going to start exploring a house and land package or a construction loan for yourself. So view this as a guide per se around what you absolutely need to know. And so we're going to start with the structure of a house and land. It has a bit different to say a private treaty or an auction.
Yep.
The idea of contracts. So you may not know, but the house and land construction process is generally two contracts involved, a land and a building contract.
Mm-hmm.
What have you seen in that space when it comes to those two?
Well, it's almost always a two-contract situation. And a lot of clients tend to think that they hear the term house and land package and they think it's just one contract or one process. The reality of that, Ben, is that it's always two, a couple of circumstances where it may not be, but more often than not it's two. So there'll be a land contract that needs to be signed by the buyer, and then at some point thereafter they will enter into an agreement with the builder. And when the deal is put together, for you as the broker, if you're putting the deal together to a lender, you will provide two contracts, one for the land, one for the construction. Now that may mean you only have one single loan because you will have provided both contracts at the same time. Or conversely, if we've done a land loan now, because the land needs to settle earlier than expected, or it's not 9 months away, but they haven't spoken to a builder yet, or they haven't reached any agreement with a builder yet, you can do two loans. One will be for the land, one will be for the construction upon the land. And then eventually, as it goes along, it all comes together at one point.
Yeah, perfect. And something which the broker will do, which will add value to yourself when you're looking at this, is that they'll do a complete borrowing power check of a land purchase and then the construction costs. Because when you first go to get that, when you go speak to the land sales agent, they might say, the land is 400,000. You can put a 5% down, and you can afford that. And you might think, great, I can. But we need to make sure that you can afford the land plus the building costs. So that is just an important piece to remember when you're looking to go down this space.
That's a great point, is that if you are looking to do a house and land package, I'd be asking the broker, what can I afford? Not so much just in the land, because people do get trapped into this sometimes. They buy the land, they commit to the land, they might even settle the land. And then all of a sudden they come back to you or to any broker. I'm just dealing with you here, aren't I? Right? So they come back to you and they say, well, okay, Ben, I'm ready to build now. You have a look at their financial position and they can't build. They can't afford to build. Now they own a block of land that they probably can't sell very easily, that they can't build on. So that's a debt that they can't really, they can manage financially, but emotionally probably not. So the first thing I'd be asking any client is, okay, I know you found this wonderful block of land. Have you spoken to a builder yet? Yes or no? If they go yes, can you give me some idea as to what you might be looking at? Just a guide. Then you can sit with them and go, yes, you can afford to do this, or no, you can't. That then leads into subsequent conversations. Is it, okay, so the house you're looking at, is it the right home? Can you look at something less expensive? Or conversely, if it's really nasty, should you be doing this at all?
Yeah, absolutely.
Yeah, so giving the right advice to your clients is really important with every situation, but with a house and land package in particular, because there's been many times when the clients have got stuck into a land contract they can't get out of, but they can't build.
And that's why going to a broker is so important in this, rather than just going straight to the bank or straight to the builder.
Well, remembering that the land agents are only interested in selling the land, the builder is only interested in building the house. You as their broker are looking at their overall financial position.
That's right, yeah.
And your clients are your focus.
That's right.
And if you can help them, great. And if you can't, then it's your responsibility to say, hey guys, you're not quite ready yet.
Yeah, that's right. Excellent. And in terms of looking after our clients, I want to raise this point as a flag for me need to be aware of, is that when you approach, say, a sales agent for land, they may say, you can get this with only a 2% deposit on the land, but if you want to get a loan from the bank for that land, they're going to want to see at least a 10% inclusive of LMI on the land settlement. So even though you might put 2% down for the land, and you might think, great, I've secured this land with the builder, with the land sales agent for 2%. You need to remember that extra 8% has to come out of your cash by the time the land settles, which could be, a couple of weeks to a couple of months.
Yeah, I think the thing there, you guys should be looking at when you're talking to Ben here is that just because there are guidelines that will satisfy the builder, land agent, that doesn't necessarily satisfy the lender. And it's wonderful being able to buy these things, but if you can't get the money from the lender, then that's a real problem.
Yeah, that's right.
So, we've got to make sure, and Ben's job here is to make sure that you fulfill the lender's guidelines, or at least explain to you exactly what the lender needs so that you know what is going to happen next.
Yeah. Perfect. And now I'll just finish off this topic. So if you are looking to go down this path, you will need to speak to a builder, of course, but a builder will not offer you any sort of contract until you have a bit of land that has been set aside, perhaps a deposit paid upon it. Okay, so they need that land so they can do a whole bunch of, you tell me, site checks.
They'll do site checks to make sure the house that they're looking at will fit on the block. They'll look at engineering plans, how much fall is on the block. They typically can't get on and do anything extra in the way of engineering, soils and surveys, looking for rock until the land is actually in the client's name. But early days, as far as getting a quote from a builder, you can certainly do that. You can even get a final fixed price contract, but that would come around about settlement day or not long after, so they can get onto the site. The builders are not allowed on that site, that block of land, unless it's yours.
Yeah. Perfect. Good. Okay. Now we're going to talk about timings.
Yep.
With all this. So with a private treaty or an auction sale, you put an offer on a property, there might be a 30, 45-day settlement period, and then wham, bam, you've got your home.
Yep.
House and land, it's a very different story. The time frame can be quite extensive. So even from the point of putting a deposit on land, for that land being titled, that might take a couple of weeks to months.
30 days to 9 months.
Yeah, that's right. And the builder, once you have that land locked away and you've spoken to a builder, it might take them 4 weeks, 2 weeks to do site checks, to get a contract even.
Yeah, 4 to 6 weeks is about the average for a builder to, get the contract put together.
And then we all know that the actual construction time can vary significantly. What have you found over your 10 years doing this that were some of the major factors that drew out the construction phase?
It's a great question. The construction phase, while the timelines will be provided in the building contract, they are perfect world situations. If we get a run of really bad weather, to where, if you're just doing all the soil works yet, so we haven't even come out of the ground yet, we've got to allow the soil to dry before, the heavy machinery can get in and do all those things. Yep. As long as the clients are aware of that, then there won't be any concerns down the road. The builder also understands that they understand their responsibility here. They want to get the house built as quickly as is humanly possible without rushing it, without taking shortcuts, et cetera, et cetera. They do have very strict guidelines that they have to work through. Yep. But I think what I found is that the clients themselves, or, you guys, if you're buying a house and land package, it's very easy to get frustrated if you don't see movement on the block along the way. Now, the builders know the timelines that they're working to. They have logistical issues that they need to get to, deliveries of the timber or the brickwork or the roofing material or the glasses. They don't always come when you might want, but they will come within the guidelines that the builder's going to work towards. Typically in the past, when you're asking me about how things have been delayed, typically the delays will come through weather. Yeah, absolutely. Weather issues, not workflow issues or materials issues, even though things have changed since COVID, obviously, with material costs and availability. However, normally it's weather issues, lots of rain, slow down the work on site.
That's right.
And that's the biggest issue, really.
Now, we're in Melbourne, so we have very stable weather, so we don't normally find weather delays here.
No, not at all. No, we're perfect here.
Not at all. All right, that's perfect. All right, so now we'll jump across to deposits.
Yes.
So how much you need to actually put in a different phases of the journey here. So with the land component, I mentioned that some land sale agents might take, say, 2%, but typically you might have to put down about 5% of the land cost.
Yep.
That's pretty standard.
10% is actually the standard. However, with competition, particularly in Melbourne at the moment, there's a lot of land being put together, and there's a lot of competition. My understanding is that some of these salespeople will take, as low as 2% to secure the block. That's fantastic if you can manage that. But remember, again, what the salespeople need to get their job completed versus what the lender needs to keep the deal rolling forward are quite often two different things.
Yeah, totally. That's great. Yeah, and so where we are in Melbourne, there are 5 different land sale and subdivisions happening, and they all
that's just in this area too.
Yeah, I know. Yeah, it's crazy. So that's the land. When you're talking to a builder, typically they will require, say, a $1,500 or $3,000 sort of upfront payment, just to sort of...
It's a commitment fee.
Yeah, exactly, to make sure that you are actually not going to be just a waste of time, basically.
Yep.
And they'll use that to do a whole bunch of checks, which gets to the point where they can hand you a building contract.
That's correct.
And it does take a while to put that together. And at the time of giving you that building contract, it'll be around a 5%.
It's the balance of 5%. Yep. So if you've already put in $3,000 or something, whatever the difference is what you need to come up with at the signing of the contract.
Yeah. Okay. Perfect. Excellent. Well, we are going to just quickly. We might talk about LMI actually. So LMI in this space. I know we could talk about LMI for a long time.
Okay. Do you want to explain to everyone what LMI is?
Yeah, that's right. So LMI is lender's mortgage insurance. It's something that you have to pay despite it covering the bank's risk. Okay, so if we're looking at a loan that is above 80% LVR or loan to value, then the LMI cost will start to kick in.
Yes.
Now, if you're having 2 different contracts, a land contract, or a land loan, I should say, and then a building loan, there's potential for 2 different LMI payments to kick in. So if that isn't managed well, if you don't have a broker that cares about you, then you might end up paying more LMI than you need to.
Let's clarify that a little bit. If you're buying a block of land and you are borrowing more than 80%, yes, you have to pay for lender's mortgage insurance. We talked a bit about what it looks like, but there is an amount there. Then, if we're going to be building on top of that, what the lenders can do without being properly advised is they'll say, right, now the project is a $600,000 project. Now you have to pay the LMI on the whole $600,000. Now, if you've already paid it once on the initial land component and you're paying it again on the finalised project price, a good broker, a really professional broker, will let the lender know that, hey, they've already paid X amount over here. Now it's just a top-up amount rather than this amount plus this much larger amount. So we want to avoid that because that's unnecessary cost to you. And someone like you, Ben, I know will sit with your clients and explain that to them very thoroughly. Let the lender know what's required so that you can call it double dipping, for want of a better word, so that the lender, they're not doing it out of any malice, thank you. They're not doing it out of malice. They're doing it because that's just what they do. So a good broker will advise them accordingly and go, hang on, the difference between this one and this one over here is only this amount. And that way you'll still pay the full LMI amount, but you will have done it in 2 stages.
Perfect.
Yeah.
All right, so a couple of lots so far. Now, just to finish up, it would be remiss of us to not talk about how progress payments work. And so we'll just dive into that very quickly. So once you have your builder's contract and you've got your loan approved from the bank, there will be a series of progress drawdowns where as the builder is about to start the next stage of construction, the bank will then pass on the next round of funding to them for that process.
So there's 5 distinct stages.
Yep.
And they're done on a percentage of the overall build price.
Yep.
Starts relatively low, then goes out to about 35% at lock-up, and then comes down to about 10% at final. That's only 3. But as the new mortgage holder on this property, you only have to pay interest only on the amount that's been drawn down along the way.
Yep. Right.
So it's manageable still, even if you're, say, renting.
Yep.
It's tough to rent and have to meet a mortgage repayment. And it's almost impossible if you had to do it on the full mortgage repayment plus your rent on a house you can't live in yet, because it's still being built. So there are 5 distinct drawdown stages, and they're designed to not make it too painful till the end a little bit, obviously, because a larger amount has been paid down. Once the house is complete, there's a 30-day period where the certificate of occupancy will be prepared and issued to the owners. And then once that's done, then that house is ready to move into, and you'll be paying your typical principal and interest repayments on the whole lot.
That's right. So it starts interest only. It is interest only the whole way until you get that certificate of occupancy, and then P&I payments start. That's right. Now, just one final thing I want to talk about, and that is valuations. And when valuations happen, and maybe perhaps some of the risk with the valuations. So when we haven't spoken about this recently, a bit on the fly here.
Yep.
The bank, when you've got your land, your building contract, and you have your land there, the banks are going to do an as-if completed valuation, and that's to help determine the appropriate LVR and loan amount.
That's correct. Yep.
So, the as-if completion is you have your land there, but the building hasn't started yet. But what would it be worth once it's fully constructed?
That's correct.
And they'll use a building contract to see what sort of
Yes, they will.
Yeah. Additions and golden taps you've added and whatever.
Well, not so much the golden tap thing, but it'll be the land price plus the construction price. They pretty much just slap those together and go, you call it as if complete, I call it tentative on completion. Every lender calls it something different. And so you can feel comfortable if you were spending, say, 300 grand on the block, 400 on the house, that it'll value at 700. The only difference to that, you mentioned about the gold taps, is if someone's gone really nuts and spent a whole bunch of money putting in things that don't really add saleable value to the property. Gold taps, great example. You won't necessarily get any extra value for having those sort of items in the home. But valuations with construction deals, on the construction deal itself, they're fairly simple to get done and they're relatively stress-free. Unless, of course, someone has gone bananas and thrown in, gold line, here, this, or gold taps or things like that.
That's right. Perfect. Okay. And as I'm thinking, one more value add. If you're mid-build and you have your contract, but you think, maybe I do want to actually get that sort of automated flush on my toilet or, underfloor heating, whatever it is.
Yep. Well, hopefully that's not halfway through the build.
Yeah, true. Are they going to have to get a whole new building contract, or what does that look like?
No, it's a great question. Typically, the way that works is that if you sign the building contract and you're happy with everything, it's got everything you want in it, and that's all fantastic. And then you a month later you say to the builder, "Hey, listen, I want to change to gold taps, or whatever it may be." That's called a variation. And the variation has to be paid for by the buyer. You can't fund it.
That's right. Yeah.
So the lender won't want to know about it. So if you've got a customer who comes to you, or you guys come to Ben and go, "Hey Ben, I want to spend an extra 30 grand. I want to do this and I want to do that." Post signing of the contract, that has to come out of your client's pockets.
Right. Yep. That wallet better be handy.
Yes.
All right. Well, thank you very much, Glenn. This is Land and Construction Loans. Reach out if you would like to actually go down that path with us. We'd love to support you. And thank you, Glenn, for sharing some of your knowledge.
You're welcome, mate. No worries.